Welcome to today's deep dive. So, the Indian Ministry of Finance has instructed public sector banks to accelerate the 13th bipartite settlement by completing wage negotiations within a 1 year time frame.
The ministry also scheduled the 13th BPS to take effect from November 2027. Key objectives of the settlement include the modernization of salary structures and benefits for bank staff, while avoiding the lengthy delays seen in previous years and settlements.
Exactly. So, on April 20, 2020, a directive from the Ministry of Finance is attempting to hit the fast forward button on the 13th bipartite settlement.
The government is also pushing for regulatory amendments to be finalized ahead of time to ensure that revised pay scales are implemented punctually. Employees can expect potential pay increases of 15 to 20% when it kicks off.
So, okay, let's unpack this. The government is ordering banks to finish wage negotiations for the 13th bipartite settlement within 12 months. And the interesting part, the deadline for these new wages isn't even until November 2027.
Yeah, the government is essentially looking at a historically sluggish system and just demanding a massive preemptive strike. Because, remember the 12th BPS delivered a 17% pay increase.
Right?
But with current inflation pressures, the 13th settlement is projected to settle for a pay rise in the range of 15 to 20%.
Oh, really? That's huge.
It is. So the government is asking banks with wildly different balance sheets to agree to a massive industry wide hit to their operating expenses all at once and in a fraction of the usual time.
So, unlike private sector workers who get, annual reviews, is this basically a giant high stakes industry wide salary negotiation rolled into one massive 5 year contract?
That's exactly what it is, and that massive scale is exactly why the process is historically fraught. You have dozens of individual banks,
Yeah.
some highly profitable, others struggling with bad loans, and they're all trying to find common ground with the UFBU's massive coalition of unions.
Which sounds like a logistical nightmare.
Oh, absolutely. Coordinating that consensus takes immense time, which is why negotiating compensation for an entire national industry simultaneously creates this enormous structural bottleneck.
Because they are negotiating for hundreds of thousands of people at once, you inevitably get that backlog, which translates to employees waiting years for their revised salaries and just watching massive arrears accumulate.
Exactly, it's not a very efficient system, waiting 2 to 3 years for a pay rise. We always hear the 14-month timeline for the 12th BES was celebrated as this remarkable achievement. Are these delays just unavoidable red tape?
Or is the 2.5 year timeline a flaw in how the management and unions actually negotiate? I mean, if private sector companies can adjust salaries in a matter of months, why on earth is the IBA getting a pat on the back for taking over a year?
Well, what's fascinating here is that the Ministry of Finance is finally asking that exact question.
You would say it was long overdue, wouldn't you?
Right. Because for decades, the built in assumption was that 24 to 36 months was simply the unavoidable cost of doing business in a system with strong unions and complex banking structures.
It has become a statutory custom. Well, almost.
Right. But by issuing a strict 12-month mandate, the government is actively acknowledging that the historical timeline is fundamentally broken. They are no longer accepting the excuse that coordinating management and unions requires a multi year cycle of arrears.
So the new mandate is basically to start early, finish fast, and implement on time.
Hit the nail on the head.
But even if they miraculously shake hands within 12 months, the handshake doesn't immediately change the paychecks.
No, there's an administrative and bureaucratic lag, right?
Like there is always a regulatory lag too, right?
Ah, yes, there is. And the directive targets that specific industry union lag too. Once a settlement is signed, updating the actual banking regulations and software to legally reflect those new wages usually takes another 3 to 4 months.
Right? The back end stuff.
Exactly. So the new instruction dictates that banks must initiate those regulatory changes concurrently immediately after the talks end. The goal is to ensure all the plumbing is fully operational well before that November 1st, 27 deadline.
So, what does this all mean? Is the Ministry of Finance just engaging in wishful thinking? Or are we looking at a realistic new standard for public sector negotiations?
It forces an entirely new operational behavior. If they actually pull this off, it fundamentally rewires the speed of Indian banking bureaucracy.
Yes, it really does.
Management and unions will have to abandon their traditional slow dance posturing and get straight to the brass tacks of financial modeling.
So the ultimate takeaway here is that the government is trying to force an end to the multi-year wait for public bank wage revisions, basically demanding a system that works for the employees on time with no excuses.
Definitely. And if we connect this to the bigger picture, it leaves you with an incredibly important question to consider.
What's that?
Well, if the government successfully forces this massive banking bureaucracy to finalize these complex contracts in just 12 months,
Yes, what's that?
what of bank retirees waiting decades for pension updation? Why hasn't the Ministry of Finance seen fit to expedite their case as it has done for working bank employees? Clearly, then, this suggests one is a political priority while the other is not.
If this channel helps you understand what's happening to bank pensions, updation, and pay, I'd be honored if you'd hit the subscribe button and join our growing community of informed viewers.
Please subscribe, comment, like, and share this podcast on other social media platforms. Until the next time.